This is Shay. She's also known as Humbled Trader. I did some research on her, and she's shown evidence demonstrating her making $145,000 a month. And did she do that every month? No. But she's been trading for 10 years, and she's putting up six-figure months. So she's going to share her top 5 day trading beginner mistakes to avoid. Now, why should you listen to this? Well, she's been trading for 10 years, so anyone that's been doing anything for 10 years deserves respect. But the other reason why you should listen to this is how to not lose all your money. Now, day trading actually requires losing some money. We call that tuition, but you don't have to lose all your money. Some people do. I've seen it. There's people that have lost their house. There's people that have lost their wife. You don't want that to be you. No, you definitely don't want that to be you. So let's learn her top 5 mistakes to avoid so that we can lose less money and definitely avoid losing all our money. See what she has to say.
Are you learning to day trade, but it always seems like you're taking 1 step forward, but 2 steps back? You might be making these 5 deadly trading mistakes. Learning to day trade is probably one of the hardest things I've ever done.
Now, you can tell that she's telling the truth because she said day trading is hard. Now, a lot of people on YouTube won't tell you that. They try to make it sound easy, but they're lying to you. They're lying to you, people. Day trading is not easy. It's anything but easy. So I like her because she's telling the truth.
Besides,
it's enormously difficult. It's also enormously rewarding if you stick with it and you can break through. But it's enormously difficult.
Learning to drive a Lamborghini. And there's a huge learning curve involved when it comes to day trading. From building up the discipline to wake up few hours before the market even opens, to analyzing news and headlines and reading SEC filings, and spending hundreds of hours of screen time observing the market. So
I had to learn to wake up at 5:30 a.m. I was used to getting up at 10 a.m. That was a big stretch, but now I get up at 5:30 a.m. and I love it. But that was really hard to learn that. I mean, that's not even trading. That's not even trading, right? That's just so that you can be awake when the biggest moves are happening. And that's hard enough for some people. I mean, do you hit the snooze button? Do you ever hit the snooze button? Like, how good are you at waking up at 5:30 in the morning or 6:30 in the morning, right? I mean, there's a lot of things you got to learn to be good at this that aren't even trading. You know what I'm saying?
This might be an unpopular opinion. Learning to day trade requires a little bit more work, just a little bit.
Okay, so we're trying to be honest here, okay? So if you're interested in honesty, if you're interested in the truth, okay, not someone that's gonna try and sell you on a lie, which is a day trading is easy. If you're interested in the truth, okay, then you should continue watching this and listening. If you aren't, if you are just trying to get rich quick and that's the thing you think this is, you are not gonna like this video. I'll tell you that right now.
More than following chat room alerts to buy and sell, some DVDs, and some motivational Lamborghini posts on Instagram. I've been trading for more than 6 years now, and I've made...
So this was 4 years ago, okay? You can see it. This was 4 years ago, right? So she's now been trading for 10 years.
Literally every single mistake in the book. Because the stock market is unforgiving, the moment I think I know it all is the moment that I will get humbled. Hence the name of the channel, Humbled Trader.
I love that. And it is so unforgiving. That's really the biggest reason why day trading is so hard, because the market does not give a fuck.
So in this video, we'll be talking about the top 5 day trading mistakes beginners make.
Let's get into it.
My personal story with all those mistakes, and how you can identify and fix them in order to avoid blowing up your small account. As long as you remember to tap the like button for a profitable 2020.
Let's hit the like button for her. Hit the like button for me, I'll hit the like button for her.
Is not having a trading plan. There's a saying that goes something like, if you fail to plan, then you're planning to fail.
And if you watch my channel, you know my recommendation for this is to use bracket orders. It just makes your life so much easier. If you use bracket orders, then you only enter the market with a stop loss and a profit target, and that's your plan. And the way you stick to your plan is you just don't touch it.
And that couldn't be any more true for day trading. And I was very guilty of this when I first started. I remember seeing some low float penny stock running from $4 to $6 within minutes. I felt so excited, my heart's beating fast, I'm sweating on my forehead. This is the moment for me to bank. And my brain's telling myself I must buy now or else I'll miss this. Right? Buy now and ask questions later.
Yeah.
Well, once in a
That's
while,
called FOMO,
I'll get lucky
right?
and make a buck
That's called FOMO, right? Fear of missing out. That'll kill your profits.
or two here and there. But all it really takes is one instance when I buy at the very top.
Oof.
And right after I buy,
This is a trade she made. She actually bought here. Ouch. Yeah, that's rough, right? That's hard to look at this huge candle, right? Been there.
the stock completely plunges and I lose 10%, 50% of my entire account. Does that sound kind of familiar? I've done it many times in the past. Most of us have. And that's what we call FOMO. Fear of missing out.
Right.
Before jumping into a trade, we must make a trading plan. I spend about 1.5 to 2 hours each morning before the market opens planning for all my trades. That's right.
That's a lot of time.
You cannot just jump out of bed 10 minutes before the market opens and expect it to rain Lamborghinis. Yes,
Yeah, the market's not going to rain Lamborghinis on you. That's good.
it takes time, but that's exactly the point. Creating a trading plan will help you avoid FOMO. By taking the time to write down your thesis, risk reward, potential entries, and exits, you're already setting yourself up for a much higher probability of success.
She trades stocks, right? She trades stocks. I trade futures. If you trade futures, then this is a lot easier, right? Because you're a pattern trader. If you're like me, you trade patterns, price action. So you don't need to spend as much time preparing, but you do need to have a plan. That plan being a profit target and a stop loss.
Your trading plan should at least include your bias, long or short,
Yeah, and of course the direction or your bias, right?
all the important levels over and under, your exit plans, and your stop losses if you're wrong.
And what I do is I make sure that I always have the high and low of yesterday marked. So those are the key levels that I'm always looking at, the most important form of support and resistance. Yesterday's high and low.
Yes, that's right. Part of the trading plan should be planning for your loss, especially in this volatile market. Because
So you say, okay, if I lose, here's what happens, right? This is the mindset of the professional.
it's only after you planned and calculated your losses that you can keep them in control. Planning for your trades is really
Right.
90% of the work. And once the market opens, I spend the rest of the 10% of the time executing my plans. And it's
Makes
just as
sense.
important to follow your plans as it is to make one. Because if you don't follow your exit plans, it can easily lead to the next trading mistake. Mistake number 2 that beginner traders
Let's hear it.
make: overtrading.
Oh my God, this is a big one.
Because most new traders focus on trading their profit and P&L instead of trading their plans and following the charts. Imagine
Yeah, I would also say in the beginning, it's exciting. It's exciting. It's actually fun. Trading is actually really fun, right? It's like a lot of fast movement and action. And so in the beginning, you can kind of get off. You just get off on the fun, right? It's providing some sort of emotional enjoyment or excitement or stimulation or something like that. And if you start using trading in that way, like you start getting addicted to the positive emotions that you get, that's like gambling. And that's a really good way to be over trading, right? You don't want your emotions to be rising in any strong or significant way when you're trading. And as soon as that starts to happen, you have to have a plan in place for what you're going to do to keep those emotions from actually rising to a level of getting you into trouble, right? Because if you're having fun, why would you want to stop? If you're getting joy out of what you're doing, or it's exciting, right? Like it's this crazy roller coaster. Why wouldn't you just keep going back for more until all your money's gone? You don't want that to happen. So you need to be able to have a strategy in place for how to avoid over trading.
this. You made a few good trades on the day so far. $100 here, $400 here, and on the screen corner, you see a nice $890 P&L. You're feeling pretty good so far, but you really want to hit that nice round number of $1,000. So instead of taking a break during the middle of the day, you keep on trading. And you start entering trades that's perhaps not your A-plus setup. And you start losing. That $890 went down to $700 and then $400.
So that's greed, right? And you got to make sure that you're monitoring your susceptibility for greed, because it's very easy to start overtrading once you start doing well. It's a really, really easy mistake to make. And if you want to learn more about the mental game of trading, in other words, how to not just manage your trades, but also manage your mind and emotion, read The Mental Game of Trading by Jared Tendler. That's my trading mindset coach, and I highly recommend his work. It'll help you avoid losing money because of your thoughts and emotions, which is really just as important as the technical part of trading.
This is where you start getting emotional and extremely frustrated. Because not only are you not hitting that nice number of $1,000 on the day, you just went down even lower from the $890 profit half an hour ago. Overtrading leads to emotional trading, which leads to revenge trading.
I would say it the other way around. I would say emotional trading leads to overtrading. And you can think about it like a ramp. You can think about it like a ramp, right? As soon as the emotions start going up in an upward direction, just like a breakout on a chart, when the market's breaking out and starts moving up quickly, when your emotions start breaking out and start moving up quickly, that's when you're susceptible to overtrading.
This is where you keep on going back to the same stocks that you just lost on and attempting to get that money back. Well, I think we all know how this story ends. When the market bell rings at 4 o'clock Eastern Time, you've gone down from being up $890 on the day to being down red $300 on the day.
And oh my God, turning a winning day, especially a big winning day, into a losing day, oh, there's nothing worse than that.
And that, my friends, is the story of the first year of my trading journey. I
Been there. Have you been there? I've certainly been there.
knew how to make money trading in the market, but I could not keep it because I let greed and emotions get in the way by over trading. So here's a few things you can do to avoid over trading.
All right, let's hear it.
First of all, follow your stop loss. No excuses. If you planned on getting out of that trade at $8, do it. Yes, I know it sucks to take a loss, but it's a planned loss that's within your risk profile as part of your trading plan. Next, walk away from your trading computer and take.
And I would just add to that, not only your stop loss per trade, but set a daily loss limit, okay? A stop loss on the day as a whole. This is one of the first things I did to really start to learn discipline. You set a daily loss limit and you practice sticking to it. Best thing I ever did for my discipline.
Take a break, generally speaking from around 11 a.m. to 2 p.m. market time. These are usually the time where stocks are consolidating in a tight range with low trading volume. Focusing your trading at the open and power hour will allow you to take the meat of the move and not wasting your precious time and money on setups that won't be profitable due to lower volume. And most importantly, when you're feeling distressed and emotional, it's time to shut down.
Yeah, I would say even before that, and I learned this from Jared Tendler, the mental game of trading, he teaches that you have to find the earliest signs of those emotions starting to rise. Okay. So it could be something like clicking your mouse button, repeatedly, or tapping your foot, right? Or maybe sitting forward in your chair. Once you can find those very, very first early signs of emotion starting to rise. For me, one of them is I grunt, right? When I grunt, I go, ugh. Right? When I'm getting angry or frustrated or feeling some kind of FOMO. So I know that if I hear myself do that, that's the time when I need to take a break. so I can cool the emotions. And I would also add, if you journal, write it out, write it out, write it out, write it out, write everything on your mind. It's a scientifically proven way of processing emotions so that they get out of your system.
And walk away from your computer. Most emotional trading leads to even bigger losses.
Oh,
I
yeah.
know because I've done that many
Same.
times in the
Same.
past before. So when you're feeling that emotions start to kick in, it's time to take a break. The market will always be back tomorrow and the next day. Now,
Yeah, and you can also take proactive breaks, right? This is also one of the best possible things you can do. Set a timer for, say, 15 minutes or whatever. And then when the timer goes off, take a break regardless of whether or not your emotions are up or not. And that way you can keep yourself from emotions rising proactively. That's the best thing you could do, is proactively avoid it in the first place.
now let's move on to the third mistake beginner traders make.
All right, number 3, let's hear it.
And that is not smashing the like button at the bottom of this video. Not only do you get no BS day trading content here on the channel, you also get a free subscription of bad jokes. Beat that, Netflix and Disney. The third mistake beginner traders make is not spending enough time on paper trading before going in live.
That makes sense.
Okay, I get it. People want to make fast money. I was guilty of that myself. Instead of spending 1 or 2 months in simulated trading and learning all the mechanics, I jumped right in with live trading accounts and my hard-earned money.
Ouch.
And let's just say I wish I hadn't done that. Paper trading, which is trading with simulated money on live charts, allows you to learn to plan for your trades like we talked about earlier, and getting familiar with all the technicalities and broker interface. There's really nothing more frustrating than accidentally selling the entire position when you meant to scale out.
First time trading with 2K. Check this out, check this out. That's so funny. First time trading with 2K.
To scale out,
And it's
or
gone.
not knowing how to change
That's
your
great.
long orders to a short. But hey, like I said before, I've made every single mistake in the book. So that's why I'm recommending all the beginner traders starting out to use paper trading. And you gotta be disciplined and treat your paper trading account as if it's real money.
I did that. I did that. And I don't know anyone else that's done this, but I actually paper traded for a year. Okay. So my first year, a whole year of paper trading, and every day I would say, this is real, this is real, this is real, this is real, and completely convince myself that I was going to treat it as real as possible. And I would feel the emotions, and I was training myself and training my whole system, mind, emotions, everything, to really get used to the intensity. So, I mean, I would say minimum 6 months, 3 to 6 months. Yeah. Minimum 3 to 6 months. A year's a lot. If you can do a year paper trading, I mean, if you got that kind of discipline, I did it, but at least 6 months.
That means if you're actually gonna be funding a live account with only $5,000, then paper trade with $5,000, not the default $1 million paper trading account.
That's also a lesson that I didn't know. When I just started paper trading, I didn't know how to adjust the amounts on there. So make sure you take that tip in mind and adjust. Don't just paper trade, but adjust the numbers of the paper trading account to match what you'll be trading in normally.
That many brokers allow you to have. Not only will paper trading
And if you want to paper trade, I suggest using TradingView. TradingView to me is the best software for this. Okay. So TradingView is linked up in the description if you want to give it a try.
allow you to get used to your broker interface. It'll also allow you to get the screen time that you need in order to learn price action. We've all seen these charts templates out there with these beautiful patterns that make trading seem so simple.
Yeah, it makes it sound so simple, right?
But in all
Makes it sound so simple.
honesty, memorizing patterns is all in hindsight. The only real-time indicator is price action. Watching how these green and red candlesticks develop in real time and observing how the stock reacts to various news. These are the kind of experience that takes time in front of the screen to pick up, and all the traders have to learn at their own pace.
Okay. Yeah, so she's just talking about, like, let's say you're looking at the charts. This was today. Okay, this is the E-mini. And let's say you were drawing some patterns, right? You could probably find some patterns in here. I mean, you can find all kinds of patterns in here, right? But if you're drawing all these patterns and you forget that you have to just know overall what's happening, regardless of how many patterns that you can draw, right? Like here is where the market started to turn down, right around here, okay? The market went up to test the high and then reversed down, but then we had another move up here, okay? And then we had a double top, I guess it'd be a triple top technically, 1, 2, 3 tops there, okay? Or a wedge top, it's also called, right? And then you had this move down. But the problem is this strong move down actually looked like a trap because you have this channel line down here. You see how I have the channel lines drawn in, and look on the daily chart. On the right, you've got the 5-minute chart. On the left, you've got the daily chart. So we are bullish, right? This means overall daily bullish bias. Look, there's 1, 2, 3, 4, 5 closes, 6 closes above the average price, right? Blue line's the average price. So that means bullish. Okay. So, and this is the channel line right here. Okay. So we stopped right here on that channel line. But then look what happened. We went sideways. We went up for one more small leg here. And then we made another top. Okay. So now we have 1, 2, 3, 4 tops. Okay. And then another move down and then sideways again. And then we broke out to the downside. Okay. So you could draw all these patterns all day long. But once this starts to happen and we get this move down, see, from here to here is a 15-point move down. From the top of the move to down here, that's about a 30-point move down. You just have to know that now here, okay, we are in a tight bear channel, right? That means we are going down, straight down. And if you look at this, how do you know? Well, look, there's very small pullbacks, okay? We almost went completely straight down. So you just have to know overall what's happening and be able to read the price action. And to be able to look at a chart like that and to be able to determine that in real time is much harder to do than just what I'm doing right now, which is looking at the price after the fact. All right, let's keep going.
Day trading beginner, mistake number 4, scaling up your size too quickly.
Yeah.
I remember how happy I
This is such a big mistake.
was after I started making around $100 each day. $100 a day, that's $500 a week. Not bad for a couple of hours of work and heading out to my real job. Small gains add up, and remember, I was still making pretty good income from my full-time job. And then one day I had this brilliant idea. What if I just add a 0 at the end of my position size?
Uh-oh.
If I just use 10 times my normal size, then instead of just $100, I'll make $1,000 a day, and 5 days a week, that'll be $5,000. Wow, what a genius plan.
I made that mistake myself. Yeah. Your mind, you always do all the math, right? Like you just add it up and you, okay, 5x, 10x, right? And the problem here is you're doing the addition, okay? But you're not doing the subtraction. Everybody does the addition, but they don't do this. They forget to do the subtraction.
Let's just say that very genius plan of mine didn't really work out that well.
Right. And not only that, but you're not actually seeing into the future that there will be obstacles. And so first of all, you're not seeing that there will be obstacles. There will be obstacles, guaranteed. And two, because you're not seeing any obstacles, you're only seeing winning green days. You're not seeing what the obstacles might be, which is even more effed up. So you're double effed.
Not only did I lose the small $100 wins I built up the last few weeks, I completely blew up my account. Because you
Painful.
see, I did
So painful.
not take into consideration all the emotional
Get rich or die trading.
stress that comes with scaling up so quickly. If my risk was originally losing $50 in order to make $100, now my new risk is $500 in order to make $1,000. And while I was ready to make that $5,000 per week goal, I was not emotionally ready to handle the $2,000, $3,000 losses. When you scale up your position size too quickly, that will lead to emotional trading. So if you are thinking of
Even thinking about sizing up is emotional trading. Even having that thought, you're already having emotions deteriorating your thinking. That's what's happening. The emotions have taken over your logical brain and they are now screwing your logic, and you are now operating with very, very bad logic, but it seems logical, so you have no idea.
Of scaling up, that's great. Good for you. You're on the right track. But make sure you're scaling up slowly. Give it a couple
Slow and steady wins the race. Slow and steady wins the race. I'll say it over and over and over again. Slow and steady wins the race. Remember the tortoise and the hare?
of weeks and couple of months before adding quarter sizes and then doubling your size eventually. Take it slow and allow yourself to mentally prepare for the possible bigger proportional losses. Mistake number 5 that beginner traders make.
All right, number 5. Let's hear it.
Following chat room alerts.
Oh, yeah.
Yes, I know I saved the best for last. Yes, I have mentioned before that I think it's extremely beneficial to trade with a like-minded community of traders and receive feedback and trade ideas, but following chatroom alerts to buy and sell, that's a completely different story. I think following others will put you months, if not years, behind your journey to become a consistently profitable day trader. And here's why. So first of all, most of these chat rooms that give you alerts, they tell you to buy and sell without breaking down why they are doing so. This creates followers, which are known as sheep, who blindly buys everything the moderator tells them to buy and sell. And guess what? Most of these sheep lose money because they have no idea why they bought the stock in the first place. So when the stock just drops a little bit, they all hit the bid to get out and market order out for a huge loss. I'm not saying you can never make any money following chatroom alerts. Maybe if you're fast enough with these hotkeys and you have no internet latency. But in the long run, following chatroom alerts will drain your account. Especially
She made such a good point there. So the biggest reason why just buying trading signals and having someone else tell you when to buy or sell doesn't work, the biggest reason why it doesn't work is because you don't know why. You don't know why you're in that trade. And if you don't know why you're in that trade, you won't have the conviction to hold through the pullbacks and you'll panic out. It's basically guaranteed.
Especially if you're in these low float penny stock chat rooms that have thousands of followers. This is what we call potential chat room pumps. So picture this in your head. The moderator starts scooping up shares of these low float, low volume penny stocks. Then he alerts thousands of his followers to buy. And guess what? Because these stocks are low volume and low float, the stock actually surges 20%, 50% within seconds. Seeing that the price has surged, the moderator
Yeah, look at that. It was doing nothing and then boom.
tells everyone to sell after he has already locked in for a fat profit. And you know what happens next. All the thousands of followers sell at the same time. And like I mentioned before, if you are a lucky sheep with really fast internet connection, you probably made some money. But the majority of those followers will be left stuck at the very top and holding the bag.
We call that the rug pull. You don't want to get the rug pulled out from under you, right? It's expensive.
I'm very sad and embarrassed to say that in my first year of trading, I probably tried out 5 to 6 of these penny stock chat rooms, and I've seen all these instances firsthand. I was a sheep too.
Okay, so she's speaking from personal experience of having made this mistake.
And I was left holding so many bags. And let me tell you, they are not the kind of bags that people actually want. Not the Louis Vuitton and definitely not the Gucci. But looking back, I felt like I deserved those losses. I bought into the dream that I can make millions of dollars just by following what other people are doing. Trading is not easy.
That's how you can tell that she learned a lesson, because she blamed herself, right? She took responsibility. She took responsibility. Now there's a lot of losers that would blame the signals and blame the person that they gave their money to. But that's what makes someone a winner, is they take responsibility and they say, no, that's on me. That's on me for putting my trust in someone else, because it's on me. I'm the one that has to learn this.
But it could be learned if you're willing to put in the time and the work slowly.
Learning trading means living a few years of your life like most people won't, so that you can spend the rest of your life like most people can't. Ooh, bars.
Like I mentioned in so many of my previous videos, it all comes down to sacrifices. Do you want this bad enough? Maybe it may
Yeah, facts.
partying less on weekends, going out only once or twice a week, and only getting 6 hours of sleep, and basically just not have a life. Let me know what you think about these top 5 beginner.
She said you'll never sleep in again in your life. That's funny. No, you sleep it on the weekends. Sleep it on the weekends, right? If you're curious about my strategy, go to tradesbybren.com/3setups and I'll share my 3 favorite trades along with how I set my profit target and my stop loss and some examples with a very detailed 15-minute video training on exactly how to do that with real charts. Thank you so much for watching. Hit that like button and subscribe if you want more. I'll see you in the next one.